So our next topic is write-offs and minimizing taxes.
Minimizing taxes is what you're after at the end of the day, no matter
Yep,
what. If you're
so.
incorporated or not, you want to pay less tax or just capitalize on every chance to get a write-off you can. So again, you got to start the building blocks of okay, what can I write off? What does that mean? What should I look for? If you can boil it down to pulling out the right card at the point of purchase, you really simplify what happens after the fact. But first you got to know because if it's personal, you're going to pay with your personal card. If it's business, you pay with your company card. The CRA it's a very gray general description, but a write-off is any cost you incur in an attempt to earn income. So it's very broad, right?
Okay. Yep.
What you have to, oftentimes I'll tell someone, if you're sitting across from a CRA agent and you've got that write-off in your hand, whether it's a meal receipt or a parking receipt, can you explain to the CRA auditor why it was a business expense? And if you can, and it's very easy, like, oh, I drove to this podcast interview right now and we paid for parking, so it's to do with our business. I'm gonna include this parking receipt as a write-off. I just justified it, and then sometimes some people want to push things. Some people want to remain on the low risk end, where if it's questionable, like you go out for dinner with a few friends and colleagues, and you could make the argument that you talk business and you were taking people out and it did benefit your business.
Yeah.
You could justify it if you wanted to argue that, but some people choose, no, I don't even want the risk. I'm just going to pay for this one personally. But really, any cost, anything you're paying for during the course of operating your business is a write-off. There's most of the time it's very straightforward. It's just 100%. It's directly for the business. Paper
like you
for your
bought
photocopier.
equipment.
Yeah, it's so clear and concise. Then you get into, there's a bunch of different gray areas where it's your home office expense. Most people that own a small business operate out of their home office. And so then you're looking at a split between personal and business, and you have to think of, CRA uses the word reasonability all the time. So what's reasonable? And like home office, the classic example, CRA says use your square footage of your home office compared to your house. You'll get a percentage, maybe 10%. You apply that against all of your different home costs, your mortgage interest, your utilities, and you get to claim a portion. That's like saying, okay, 10% of the cost of my house is actually my business. Vehicle is similar, where again, tracking mileage, back to what Matt was saying before, tracking your mileage, and every business owner has at some point been tracking mileage or been hounded by an accountant to track their mileage. And so finding out what portion of using your personal vehicle is business versus personal. And then that percentage you can claim a write-off for as well. Things like home internet, cell phone. Most people don't have a second cell phone if they have a business. If they are their business, if it's a small business, you're just using your phone, right? And you're probably paying for that personally. Maybe you're paying it for the business because it's so heavily leaning towards the business side. But sometimes you just do what's reasonable, 50-50 split between myself and the business, and then you just understanding what is a write-off. Make sure you can start trying to capitalize on claiming them all and dropping your taxes. So